These hearings provide an important mechanism to hold the banks and other financial institutions to account before the Parliament and the people of Australia, particularly because of the concentration of their economic capital and power.
In the last couple of weeks, the chief executives of Australia's Big Four banks have put in lengthy appearances before the House of Representatives Economics Committee, bringing the Parliament and the public up to date on what the economic crisis looks like from their perspective. It is a view based on dealings in the real world, rather than the perhaps more detached view of bureaucratic economic advisers. Surprisingly, it has not been all grim news.
The size of the economic contraction is less severe than we first anticipated, but we face a long and uneven recovery.
But it is obviously not all good news either.
We can see the official stats that say the number of unemployed went from 700,000 to 1 million, but we think that probably underestimates it in terms of the movement. There would be more people.
Let's face it, the bank's behaviour in recent years has seen their reputations trashed in inquiries including a Royal Commission. Apart from their crucial economic role in the bleak economic times we face, the banks clearly understand that the way they behave now offers them a path to redemption. They want people to know that they are there to support the community, not just rip off customers.
This responsibility is not just on government. Businesses like NAB must step up, and we will.
The most crucial immediate issue facing the banks and their customers concerns the massive numbers of loans that were put on hold when the coronavirus crisis first hit the economy earlier this year. According to the bank regulator APRA, a staggering $240 billion worth of loans had been deferred by the end of July. 9% of mortgages and 17% of small business loans were on hold. It was obviously never a permanent arrangement, and banks are now engaged in one of their biggest ever operations, contacting 450,000 customers individually about what happens next. Once again, there is some good news. Quite a lot of people have already started repaying their loans.
We are seeing a very healthy number of those start to exit from those deferrals.
At the peak 3 months ago, there were just under 500,000 mortgages on pause, along with around 230,000 small business loans. Since then, people have gradually been going back to their banks to restart their payments. But one group is coming off much quicker. Based on APRA's tracking figures and its own internal research, the Australian Banking Association estimated that by August, 144,000 mortgages will have restarted, but only 20,000 business loans.
Banks are reporting that anywhere from 45 to 55% of their customers, so somewhere around the 50% mark, are indicating that when their 6-month deferral is over, they believe they will be in a position to return to full repayments.
So what explains the drop in the number of deferred loans?
I think for some of our customers, they haven't been as severely impacted as they might have otherwise been, and hence have been able to continue making their repayments.
The banks also report that Australians have opted for caution and paid off up to 20% of their credit card debts. But what about all those negatively geared investment loans? The banks say only a small portion of paused loans are for investment properties and argue they are less of a default risk as they are more likely to be sold off. And the banks are only predicting a possible fall in housing prices in some markets of about 10% in the next year.
We were talking about in the 10% range, probably slightly less than 10%, and we've probably got 3% of that so far in terms of what's been reported.
As to how many people may eventually default on their loans, the banks say it is hard to tell between what is happening with loan deferrals and uncertainty about what government support will be available in coming months. The message from the banks, though, is that if you are worried, you should be talking to them because there are options to help.
It's because people's situations differ that we'll need to work with our customers on the solutions that are fair and appropriate for them. I want to assure the committee that we will be ethical and sensitive in our actions.
The banks are as aware as everyone else that we are entering a new phase of this economic crisis as government income supports like JobKeeper start to wind down.
Banks actually have a lot of solutions they can offer to individual customers to get them back on their feet over a period of time. And, to be frank, that's not only in the customer's interest, it's in the bank's interests.
Hi, I'm Lee Sales. Thanks for watching this story. If you'd like to watch more of 7:30's stories, they are on the left of your screen. And tap on the button below to subscribe and get the latest from ABC News.